Erin, looking at the S&P 500, new all-time highs today, right? Every time people say, oh, I missed it, or they're worried, and look, another new high. There it goes. It's the best first half of the year, basically, for stocks since the late 1990s. You're watching and doing some comparisons. Small caps are on your mind. Tell me the comparison you're making and why it's important. What's the takeaway?
Well, we've seen this shift, particularly in the first half of the year, away from a lot of the mega caps. And so even though we're seeing continually the S&P reaching new high, rarely are those days just driven by the mega caps, which is what we saw a lot last year. We've actually seen a lot of new highs achieved by value companies or energy companies, just like you were talking about before. And we are starting to see extenuated valuations across industries, across different capitalizations within the large cap universe. So I'm really looking for the next leg, what's going to drive us higher going forward into the second half of this year and into 2022. And I just see a lot more opportunity within the small cap universe, partially because they should benefit from more economic reopening, more so than some of the large caps. They can have greater acceleration. We know that interest rates are going to be held low for another 18 to 24 months. So that's also beneficial for small caps. And you're really getting about twice the expected growth rate for about a 10% discount to your large caps, or a little more, depending on which valuations you're using. So, you know, you're getting more potential growth for a cheaper price. It just looks like a nice bet. And so investors that may be overweighted in large caps, because we have had such an amazing start to the year, it might be time to take some money off from those wins in your large cap and put it into small caps to really be able to outperform over the next 12 months.
Right. I think you're definitely saying you're going to get more bang for your buck here, and some of the catalysts like reopening and low rates that continue could be good for this group. Now, would you do this move sort of 100% into small caps, or is it leave some in the large caps and overweight the small caps, maybe 60-40 or something like that?
Exactly. So yeah, I'm not saying put it all in your small caps. I think there's a lot for just being in, let's say an S&P 500, like a spider, to get your exposure, of course, to the large U.S. economy, as well as international corporations, right? Because the small caps are really U.S. focused. So I think it's beneficial to have that diversification. But certainly, let's say if your small caps was maybe only 10%, 5%, even just 15% of your allocation, you might want to bump it up another 5 to 10, even 15%. Still keep it less than half, but making a more meaningful bet.
And then when you look at growth versus value, you did talk about some of the frothiness that may be in some of the bigger large cap names. How does this growth value chart that we're going to take a look at fit in with your year-end projections for this market?
Right. So we've had this pull and push against value versus growth. Value basically is still just barely eking out an edge over growth for the year, but it looks like they've really settled. The inflation concerns are settled, and we may just see the two more closely tied and not have these big 10% disparities. It looks like the value run is completed, but I don't quite see us being able to have the growth do a massive outperformance like we saw in last year. So this might be a time to really be more core centric and using sort of those not being a big tilt from value to growth. Either way, for the second half of the year, is we really get to better understand how the economic reopening will happen, as well as some of these new spending plans, the infrastructure spending plans, will really hit the economy. So I was heavily overweighted in value up until about 3 weeks ago, because I did see that turning point, particularly as interest rates have come down. And now that that's really stabilized, I think it's time to focus on the cores as well as some small caps.
It's interesting, too, that we're hitting new highs. Do you think that you ride momentum overall? As you said, you were in value, but when you hit certain points, then you say, hey, I'm also going to consider growth now and move there a little bit. When you hit new highs, like what we're doing on the S&P 500 with the lowest levels now for jobless claims, for example, right? Energy's at new highs, and you still have a low rate environment. Does this mean higher for markets 6 months, 12 months, 18 months?
Yeah, everything is really set up for the U.S. to be continuing to hit new highs, even if we see periods of small pullbacks or consolidations. Or let's say if inflation fears come, it might drop. But everything is set up that the U.S. economy is going to be the leader, and therefore our stock market as well over the next 6 months.